To the corner of Wall and Broad in New York City, that's where Greece is having an impact there. Stocks are down triple digits in early trading as investors look for safe places to park their money. Hey everyone, I'm Vladimir Dutiu.
And I'm Elaine Quijano. Greece is on the edge of a debt default, and the country is shutting all its banks this week. It's also limiting withdrawals from ATMs, causing lines snaking for blocks. The country has until tomorrow to pay a $1.8 billion debt to the International Monetary Fund.
Jill Schlesinger is here to help explain the latest and why the crisis matters to people here in the U.S. Jill, this is a big deal. The Greek government has essentially frozen the assets of its citizens, saying that they can't take out more than 65 euros per day. What is the impact that we're looking at across the pond here?
Well, let's of course start with Greece, where the impact is severe. Here in the U.S., the biggest impact will be market-driven. As you said, stocks down about 1% overall. That's not terrible. Oh, by the way, in Europe and in Asia, 3 to 4% losses. So if you're an international investor, you got a bunch of mutual funds in your retirement account, those are going to be quite volatile. Greece is a tiny economy, okay? And U.S. banks greatly reduced their exposure to Greece over the past 5 years since this crisis first flared up. So we are not likely to see a direct impact. However, and this is a big however, if Greece decides next weekend to vote to basically say we're not going to actually accept the European officials' demands to tighten our belts more, they could leave the Eurozone, and that could continue to cascade across both Europe as well as over here.
And Jill, specifically, what do creditors want Greece to do, and what has Greece's response been to that?
Well, creditors are looking for two specific things: an increase in taxes and more contributions into the Greek pension system. Now, that seems like a reasonable request, except what Greece is saying is, gosh, we've done that already. And in fact, there's been amazing progress. When you look at the numbers, Greece has reduced its public sector employment by 25% in the last 5 years. The percent of its debt to the overall government, the size of the economy, has been reduced from over 15% to more like 3%. So Greece is saying, we're on the path. Stop making this so painful. The austerity is killing us. We're back in a recession now. So ease up, Europe, and we'll get there.
You know, Jill, it's interesting. You've been in the business for a long time. I was in the business earlier. I remember back in 2000 telling clients that as we looked at this might be a mistake to have some of these smaller countries in the Eurozone. We always felt that Germany and France were going to carry these countries, and something like this was predicted even back then. Do you not think that they thought about that and probably should have said maybe we shouldn't have had you guys in this at all?
Yes, regrets are many, I'm sure.
Right?
Yeah, absolutely. But, you know, when they kicked off the euro back in January of 1999, this idea of a monetary union seemed beautiful, right? It transcended politics. Bupkis, come on now. It doesn't transcend politics. You have a monetary union. It's not backed up by a political union. And herein lies the big issue with the Eurozone in general, that you can't have one without the other. So now here's what we're facing. We've got a situation where Greece owes about $270 billion to the Troika. That's the European Central Bank, the European Commission, and the IMF. They are not paying that money back. Let's all get real. And what Greece is basically going to have to look at the eyes of the European regulators and say, you know, you're not getting the money back. Let's cut this amount in half. Let's restructure this.
And we'll tighten our belts.
Right, and we'll all move on.
Right.
Until that happens, unfortunately, we're going to keep talking about Greece for a while.
Because what's the contingency plan?
Plan B looks, I don't know, look, there is a plan B, obviously.
Yeah.
They know what it is. And right now we're in the middle of plan B, which is capital controls, which, you know, limiting the money that comes out of banks. It is also coming down to the wire where not just tomorrow where we have an IMF payment due, but it's the next 2 months where there's a lot more money due to European central bankers. When if those defaults were to occur, that then puts Greece as a country in default, and no one will lend money to them, and that will be the beginning of the end for Greece and the euro.
Their own currency, maybe?
I think drachma's coming. I started using hashtag drachma watch yesterday because I thought that's coming. Hey, you know what? Look, if you're an American, you should be rooting for that. If you're a Greek, you might be rooting for that because you want to devalue the currency to make things cheaper there, and that allows people to come over and spend their money.